Hello everyone, this is Sam Wong again, telling you the stock market and give you a recap of last week and what's coming up next. The market, as you can see that for the week, it was doing very well. Nasdaq has up 2.7%, as well as Dow Jones Industrial Average up 2.69%. But you can see the trend that the Monday and Tuesday were actually both of the index and some of the stock were down, leaving the S&P 500 extend also losing streak before investor purse inflation data. This is really was kind of normal, and Monday to Tuesday the market as the previous week have been up, and as well as the investor will look forward to Wednesday CPI index. It came up that to be 8.5%, which was better, 5% better than the forecast of 9.0 compared to June. It made the market and since then start to reverse the position, and you can see that the people kind of position in and have cash coming into the market and drive the market, both industrial Dow Jones Industrial Average as well as Nasdaq in the same trend that we're pointing out. Um, the For investors, Powell's comment serves as an early indication that future rate hikes could potentially be less than the outsized 75 basis point rate hikes that happened in June and July if inflation shows signs of cooling. So that's why led to the more than 10% rally in the S&P 500 as well as all these other two major indices. The S&P 500 is down 13%, and you can also see that if you look at the Nasdaq as well, it actually in a week it was up about in 6 months it was still down 5.39%, but over the week kept about 12% back. So that was like 17% down in Nasdaq as well, Dow Jones Industrial Average as well. If you look 6 months from that compared to the rebounding 9% lish for a week or so, it's like 12% down that half week, which means most of the territory already recover. And if you can look at the trend with the Nasdaq now, you'll be not surprising if the momentum continue. You could very well hit back 14,000 points, which is another close to 10% up in Nasdaq. If that momentum continue, you can see that definitely for a lot of small cap stock and high tech stock will be benefiting that and will continue to push up and really rebounding back. So if for those who are listening to my previous video last week, noted that even there's some disappointing earnings announcement of Apple and Metaverse and all these big chips. The fact was Microsoft and Google were still higher, and Apple actually Friday closed with $171. And so why it was up? First of all, the market have been beaten really bad since June. If you look at the trend, there's money on the side because a lot of institutional investors already exit and sold at the right position due to the algorithm, which is the automated program computer to see how much taking the profiting. So a lot of these stuff, I wouldn't say necessarily undervalued, but comparatively to the 52-week high, definitely where for these value stock we call, which still give dividend, making money every single quarter and profit. You can see that kind of in a sense undervalued. The other thing cases of for those who know that Amazon and Google split, if you have bought it beforehand, you already at this point with the momentum pushing back up, rebounding from 12,000 points Nasdaq to 13,000, you actually earn about 20% depending on when you bought it at 20% return. So it was really easy money in a sense. So just want to give you a note that Tesla is going to split in August 24th. So right now the market Tesla have been dropping down from $800, right? And it really, if you look at monthly ago, it was as low as 680, and now it's hitting the $900 close with. So if this stock have been, let's say next week or week after, between now and August 24, have something about profit taking, the market have been slipped, it may be opportunity to buy that and wait, and then you split, you probably will push it up. So maybe easy 10% profit. But again, it does not necessarily work every time, but you can see the other two big one you work, and you look at Tesla's since its last split, really the stock had doubled. So it gives you a very strong momentum, and you really, in a sense, nothing wrong to buy that. And so that would be my recommendation. Also, oil price have been continued slipping. Crude, crude oil, there may be a deal they're going to make with U.S. and Iran, and if it is, it's going to add 1 million barrels a day. So that will may push the oil price go down, and therefore inflation pressure will be also lower. So you may give some opportunity there. So you can see the oil prices in that cases have dropped, but Friday have some motions to push it up a little bit, but then overall the last 2 weeks, if you look at it, since oil prices dropped from the high $120, drop back to $90 below, which is 30 to that 25% discount. And in Houston, if you look at around, I think May was the highest time. Around May or early June, it was like $5 per gallon on a regular gasoline. Now it dropped to $3.50 in a gas station. So that's kind of give you a favor of what happened to oil and gas. And also bear in mind we're in hurricane season potentially in month of August. So there may be therefore there may be a disruption demand. I mean not demand, supply. So then oil price may actually surge, but after August normally you start to fall in the fall, then you're talking about heating oil because the summer season is over, which means traveling is be over also probably after the Labor Day. And so having said that too, yes, United Airline and cruise whatnot, you're still looking for that in the Labor Day holiday, which is September the 5th. So there may be an opportunity, continuous momentum will drive these start rebounding. For example, CCL have been drop as low as $8.50. If you look at it, it's not that far ago, 2 weeks ago. So now it bounced back Friday at $10.70. So that is giving you 15% return roughly. So if the momentum continue and look at the 52-week high of CCL, which is actually $26, I believe, something around that range, you still have pretty much can be potential if you get back up to that range, then you actually get 100% return, which is one of the remarkable stock that I recommended for those who listen to my video was robots. So if you look at a month or so in June, back then it was as lowest point was 21.50. Well, roughly you wouldn't necessarily get that, so maybe about $25, $28 you have got it. So now it's at $50. Actually, and the week high was $53. So you look at that, you really will have 100% return in a month. And HYLN is another one for my favorite. I mean, they also start to have reference things were going pretty well. Well, they announced earnings, which actually lost less than expected. And they continue the momentum with making contract to get the revenue collected and also have tax credit. So this stock actually were at the time as low as $2.80, and you jump it back onto as high as $4.60. Right now it's sitting at $4.50. So something to look at it, because if you look at this stock about a year and a half ago when they first went to IPO with SPAC, $52 was where they were at. Now would they ever hit $52? My view will be you have to wait till EV happen in 2025, which is the very milestone important year for EV. If it takes off, then you will be really in the rewarding time. So Tesla, XPEV, Leo, Lee is all going too well, or some other American stock is all. EV stock is all going toward that kind of date, and the important part is that production. And Apple called it, in the previous quarter or so, talk about 2024 is the magic year that they will have it started to be produced. And Tesla again, you would actually, if you would have got about 7-ish, now it's about, let's say you sold it around 850, you do have about 20% return as well. So and PayPal is another remarkable one. It's like $75 was the lowest, $80 or so. And if for those who went back to watch my video, I specifically lay out PayPal should be $100 valuation at least. So now they're hitting the milestone. And then, so does Netflix as well, and recommend $180. If you have sold maybe not at $249, which is where you close on Friday, maybe $225, you still have a very good return, 25% return. So those are the stocks that I have highlighted in the past. And again, the strategy bear in mind is buy at a dip and sell at a strength. So if you are looking at short term and you only made 25% less, maybe you want to walk out some of the position and borrow the cash and wait for next round of dipping. Because after this earning announcement, which is still going on next week, which I'm gonna tell you what stock they're gonna have. We start with some Chinese stock first. Lee will be announced earning on Monday, which will impacting the sector of the EV. Tuesday we'll have Walmart, which estimated profit of $1.62 a shares, and Home Depot profit target at $4.94 per shares. And these stock is more like a grocery, like it will be Target, Kroger, these type of stock that will be as well as in alignment with that sector. So if they are actually announcing earning or they don't have a warning out, I mean, Walmart have made an outlook first and say, things getting worse, so the stock got dipping due to that. But maybe now they announce earning, they say inflation cooling down, so then that will actually drive these stock go up higher, like Kroger. Kroger have been gone down quite a bit too, if you look at it. And then Wednesday you had Tencent. Monday is a Tencent Music, which recorded 8 cents, 8.5 cents of profit per share. I mean, and Wednesday you have Cisco, Bilibili actually will be expected to report a loss of 68 cents roughly, but we'll see how it is. But this stock, for those who will listen to the video, I just talk about the revenue, the subscribers. It's just like Roblox, and it's a long way from Roblox because it's not as popular as that. So they actually have a loss, and the stock have actually hit a pretty high, and then you crash. So it was gone as low as like $20 a share. So right now would be, you can evaluate it yourself and see if you have a lot at very expensive prices, you may want to consider buy some to dilute, right? Because the other methodology to keep it for a long run, you do want to do a weighted average methodology if you're not short-term profit takers. Then Thursday you have Ross, you have Kohl's, TPR. So these three stocks is more related to retail, and the Friday have Foot Locker. Foot Locker is expected to report a profit of 89 cents a share. So these are all represented in different type of sectors, kind of balancing each other out. So hopefully, if the momentum continue, report earning, talking about inflation going down, have a quick revised outlook for some of these companies, I believe the momentum will be continuing. Then talk about oil company for second. Warren Buffett had obviously buying 25 billion position in Chevron and 12 billion stake in Occidental Petroleum, symbol OXY. So they probably in the mindset a lot of analysts expected that basically Warren Buffett may end up buying out OXY. And again, this stock, if you go back to my video, I did talk about this stock way back. It was from $80 a couple years ago at the pre-pandemic, dropped it to $9 a share, and they have a lot of debt issues back then. And you also look at oil price back then too. I mean, it wasn't a very good time for energy companies, and some of the bankruptcy happened, and some of the smaller energy and refiners, marketing company or refining company as well, or not refined, but the upstream company as well. So we definitely, thinking about this stock is if you would have bought it $9, even $15, now it's like 60 some dollars. So you really actually a lot of gain in 2 years of timeline, which is great. So if he really going to go and buy out and take all this rest of the stake, you probably will end up at least $70 a share, which is now 60. So you still have 10% room from that perspective to be considered. Obviously, it's hard to tell what the oil price is going to be. So with the EI reporting of this data, demand and supply, and how China COVID working for COVID and continue the productions and so on. But again, it is a very in the long term view where you also have learned that J.P. Morgan has set the oil price go up to $200 a share, whoever $200 a barrel, whoever come up with that, to a very pessimistic view saying you would drop it down to $50 a barrel. What a big range, right? So I wouldn't listen to those people because the range like that just doesn't make any sense. So again, Bitcoin prices also have stabilized a little bit, but still around $23,000. So I will be very excited to see next week, and hopefully the momentum will continue. But as the earnings season start to be complete and slowing down, and then the Fed September potential another Fed meeting to raise rate. In between, they'll probably have some volatility that need to get posted. So again, the strategy is buy a dip, sell at a strength. Hope you enjoy my video. Thank you very much.